G'day traders, take a second for me and hit the like button. If you want to drop a comment, that would be great. And if you want to share it with somebody, fantastic. If you haven't done so, subscribe and turn on your notifications. Thank you for doing that. I appreciate all the feedback, and let's get started. G'day traders, Stacey Burke from Stacey Burke Trading today, just following up on winning stress-free trades. And we talked about first red day setup in previous videos, the 3-day setup. We're going to look at two perfect examples of trades that fit that criteria on the pound and gold, and just reiterating the difference between scalping pips out of the market versus trades that have the potential to be scaled up in size, but also using the weight of the market and the bigger picture, the bigger scenario of when the market is offering you low-hanging fruit for a capitulation type trade. Now we're looking at the British pound, and on the daily chart we have a market that has been since the beginning of the month. We locked in the high at the end of October, and we had a market that was engulfed at the end of the month and breaking down again, and then we started into our new week. The gray lines are our Fridays. Monday was a bull candle day, and we had a first red day on Tuesday in a downward moving market. Al Brooks might call this an H1 day, strongly moving down. We get a bull candle. I talk about selling bull candles and downtrends, etc. But we'll take a look at this on our 15-minute charts. And again, just identifying the criteria that allowed this trade to set up. Friday was payrolls, and we had a market that locked in a peak formation low on Friday. So again, we had a low of the week. And thank you, Tudor, for that tip. I do have my rectangle up top. So we had a peak formation low that formed at the close of Friday, underneath of the Thursday's low of the day. And I did a video on that earlier this week about the previous day's highs and lows, offering information as to becoming possible flip zones, etc. But we have our daily chart. Our daily trend for the month so far is down. They've locked in the high. And if we just go back and take a look, we had a low from the previous month sitting down at this level from back in September, down at 34.11, and of course the low of Friday down at 34.23 without taking out the low of September. Again, I've talked about initial balance Monday, Tuesday, setting up the high and low for the week. We've talked about peak formations, but today talking about first red day, stress-free winning trades. And if you want to get more information on the first red day, go back into the other videos. There's several videos where I break down the rules, but essentially we need a 2 to 3 day pattern where there's been a large move and volume gets trapped up high. Ideally, we're in a downtrend, but the market moved on Monday, and you'll notice that the movement on Monday, this is a first day runner. I'll actually just get our Monday bar on there again. The pink line is Monday. This is Monday. And actually, we'll just type this in here so people can see that. Monday. And so Monday runs and trends. And this space where the market has made a 50 pip shift is important to understand, because later when we're in a downtrend, this shift is important. And what happened on Tuesday is we had a peak formation high put in place. It broke structure. It broke down, meaning that it's broken the lows. So we have a market that's gone up. We have a low of the day on Monday, but it's broken the low of the day. And this break in structure is important. I talk about a day zero effect. That's peak formation high, peak formation low. And you'll also notice that the volume is now collecting above 50. So we don't know at this stage, but we know we have a peak formation low on Friday. We have a low of the month down at 34.11, and we'll just sort of pencil that in there roughly around this area. We'll make that 11 for anybody who wants specifics. That's the low of October, and the market goes sideways. Now, again, we can look at the calendar. We see CPI on Wednesday night, a major U.S. news. There's GBP news I believe, was earlier in the day. Governor Bailey spoke on Wednesday. But we have a break in structure, and the market is holding above 50. This 50 level is our area, what I would call the death line, the neckline, and that's where we see the bulk of the volume now collecting in our 3-day cycle. So peak formation low. The market's made a shift. It's moved up, and now it's getting people to trade up in that upper 50 pip box. It breaks down in London, continues to move lower. So again, now we have lower low. We have another break in structure. So we're in a downtrend on a daily market. We have a pullback after payrolls, major release, our first bullish day, H1 as Al Brooks would call it. And then we have our first red day. First red day is a down day after a bull candle in a downward market, or it could be a 1, 2, 3. First red day, doesn't matter. We have our first red day, a market that closes below the opening price. We have break in structure. We have volume collecting up top. What do we need to enter this trade? Now, coming back to our timing window, and again, 3 session setup. If you've heard me say this over and over again, I'm looking for trades that set up for moves in that first or second hour. Obviously, with New York, this can coincide with the equity market opening, which is at 9:30 New York Eastern Standard Time. So wherever you're at in the world, Google that. I don't know. I keep saying this over and over again. I don't care what time it is in London. I don't care what time London closes or London opens or anything else. It's New York time. So when those sessions open, I'm going by New York time. If London opens at 4 a.m. New York, then that's what time I'm going to be coming to the screen, is based on New York time. London's opening at that time, but I'm using the New York time. It's a 24-hour New York chart time frame that I'm using, and New York 9:30 is what I'm looking for. I'm aware that we have news at 8:30 New York time, CPI. And if we zoom in on this, we'll just, again, I reinforce, I do not trade in front of the news. That does not say that there cannot be a trade already in place where the news completes the move. As we saw on payrolls last Friday, gold was a great example. If traders held on to that, there was another 50 pips in the blow-off. But again, I'm not big on front-running the news. I don't get in front of the news. I wait for after the news release. It can be 1 minute sometimes, depending on how that sets up. It might be 15 minutes. But either way, we have our breakdown in structure. We have a lower high made in London. We have our CPI now. We have our first red day. We have a breakdown, which is exactly what we want to see. And we're looking for this pullback into this lower high after the news in our first red day. We have the first candle of the New York session is our bear pin hammer inside of the previous day's low. So we talk about a flip zone. They've broken through this now and pulled back. This can now become a flip zone and a selling zone in a downward trending market on the daily charts for a move not only through the swing low, so our swing traders would be looking to short this, but also through back down to where this move initiated on payrolls Friday and also the low of September. So this move offered traders a significant opportunity. So again, let's just review this real quick. We get our move up on the Friday into the close, peak formation. So they've broken structure. They've broken the low of the week and of the month on Friday, pulled it back in payrolls, gone into the close, dipped down into the demand area that was locked in by the peak formation on Friday. That became a flip zone, Thursday's low. We got low-hanging fruit trapped down low, almost the reversal down low. So you'll see the volume. They made the big shift. BOE on Thursday. Trap volume down low, peak formation low on Friday. Day one runner. Then we break out in the direction of the trend and reverse that. Peak formation high, peak formation low consolidation. That's our day zero setup. We have volume trapped above 50. That's our death line or our neckline. They break structure yesterday, lower high in London. CPI news takes traders back up into the lower high of London for our bear pin engulfment short at the open of the New York session, a first bar trade all the way back down for a 100-plus pip move into the low of the month. And it's possible we may be seeing a second day trade opportunity setting up in the pound already. Again, strongward, downward moving daily market in that monthly chart. Going back, we are at the low of the month, but we can certainly see a second day follow through. There is space underneath. Again, how price behaves in our Asian session may give us some insight and information as to whether or not we'll see some follow through on this today on the British pound. Not a trade recommendation, just talking about a simple, stress-free winning trade. First red day setup, 1, 2, 3, day 1, day 2, day 3, and then the break in structure, trap volume, major news, the whole package. So hopefully you got value from today's video, traders. Keep it simple. First red day, a 3-day setup, major news, a shift in the market, volume trapped, up higher, down low. We have a downward daily moving market. This was a textbook great opportunity for traders who picked that up. And again, thank you for the emails for traders who nailed this, because that is gold. This is different than just scalping pips in and out of the market. This is an opportunity that once this market's going to go, the thesis is it's not coming back. It's going to keep moving. And that's an opportunity where I would like to size up in my trades. So keep it simple, traders. Have a great trading session. Keep it strong week. This has been a fantastic week for opportunities. So keep moving in the right direction, 1% better every single day.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.